Dan Ives of Wedbush has this to say: there is one chip in the world fueling the AI revolution, and it's Nvidia. The AI revolution is heading into its next gear of growth despite the Trump tariff war playing out. Dan joins us now for more. Dan, good morning.
Great to be here.
What did you like most yesterday?
I mean, look, the godfather of AI, Jensen, delivered yet again. And I think if you look demand outstripping supply, we believe 8-1. And despite the China tariffs, I mean, I think if you look apples to apples, that would have been a $53 billion number compared to where the street, apples to apples, would have been at $48 billion. I think it just shows there's only one chip fueling this AI revolution. It's Jensen NVIDIA.
There's a question of whether they'll be allowed to fuel that AI revolution. In other words, if they will be allowed to move into China in the way that they kind of need to longer term in order to maintain that dominance. What about yesterday gave you that confidence, given the fact that there still are some pretty existential risks about their ability to operate in China?
Yeah, I know you'll talk to Navarro after. Look, the reality is that Jensen and NVIDIA are essentially giving away their China business. On a silver platter, Huawei, here's our business. And that's the reality. And I think more and more, there's going to have to be some negotiation where they're enabled behind, right now, back against the wall. They need to have a chip that U.S. sanctioned that they can sell into China. Because otherwise, all you're doing here is you're cutting them off at the knees, and Huawei is getting that market. And that's the reality. And I think that was a shot across the bow last night from Jensen. They're in a position of strength. There's one chip in the world fueling it. They continue to see demand that's, I believe, staggering.
There was sort of a subtle narrative shift. There's been a tone from the administration, both this one as well as the Biden administration, that the way to curtail China's advance is to limit some of the exports of U.S. chips and U.S. technology to the world's second biggest economy. It seemed like Jensen Huang was saying that's not right. They're actually catching up. And if we separate ourselves, we're going to fall behind. How much is that catching on in any kind of policy circles, but also within the tech circles?
Yeah, I mean, as someone like myself, I've spent so much of my career, in China, in Taiwan, throughout Asia. That's unrealistic. That think that China's just going to sit there. I mean, if you put them in a box with 2 toothpicks, seltzer water, and sunglasses, they come out with a chip. So the reality is, you don't want to give them fuel. And I think that's what Jensen's talking about. You have some of the best engineers in the world. Right now, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. Don't cut U.S. tech off at the knees. And I think that speaks to NVIDIA, speaks to Apple. And I think those are some of the things that you're hearing across the board that we're seeing in tech. And I think that's some of the damage and the balancing act that you guys see with these tariffs.
Do you think Jensen Huang then is going to have the company develop a chip that is export compliant to go into China?
100%.
But why would he do that if he did that with the H20 and then the United States said you can't sell it?
It speaks to negotiation, because it comes down to, like, Jensen also recognizes in the Middle East and the red carpet tour, and the reality is, what's that tour without Jensen? What happens to Jensen? Yeah, we're not going to sell in the Middle East. I mean, it just speaks to, like, our biggest chips on the table. It's NVIDIA, it's Apple in terms of...
NVIDIA sparking a chip rally after topping first quarter expectations with revenue soaring 69%. The company also warning of an $8 billion revenue hit in the second quarter due to China export rules. CEO Jensen Huang says that the curbs weaken America's position.
China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to U.S. industry. China's AI moves on with or without U.S. chips.
Joining us now, we've got Antoine Chkaiban, who is the New Street Research Technology Infrastructure Analyst. Just want to start with your biggest takeaways from the results, especially considering what we just heard in the soundbite there from Jensen Huang.
Yes. Hey, Brad. Hey, Madison. Thanks for having me. So, yeah, of course, there's this 8 billion headwind, in the second quarter. And despite that, you have NVIDIA guiding data center revenues up modestly. So that's, a very significant guide up if you account for the headwind. And I think the key takeaway here is that there's a surge in inference demand. All these reasoning models that have been introduced over the course of the year, 03, 04, DeepSeek, that are capable of generating a lot of tokens to improve upon their answers. That's driving a lot of demand for compute, and that, I think, is the key takeaway from these earnings. Of course, that translates into a lot of demand for the latest generation, Blackwell. I think there were a lot of concerns around potentially production challenges there. I was in Asia last week. I got the opportunity to talk about the supply chain. And indeed, NVIDIA faced a lot of challenges. It's a very challenging product to ramp. And now we have visibility into 1,000 of these racks being installed at their hyperscale customers every week. So that's kind of dismissing any concern around inventories building up at OEMs for Blackwell. So I would say those are the key takeaways from the print yesterday.
And I know you mentioned in your note that you sent over to us that you are still buyers of any weakness. What is your long-term bull case for NVIDIA, especially given some of the concerns that we'll get to regarding some competition with China specifically?
Yes, so on the demand side of things, our view is that the token is the new transistor. That's our motto. So when you're able to innovate at a pace that allows you to lower the cost per token, that drives tremendous demand. And to go back to the reasoning models that I was talking about earlier, there's an opportunity to solve humanity's greatest challenges by putting AI at work, in data centers, in huge data centers that are going to comprise millions of XPUs in the next couple of years, putting those data centers at work to try and solve quantum physics, to try and help companies design products, to try and help governments, optimize their budgets. And I think, that's our long-term view for AI in general. Now, with regards to your question on competitive dynamics, so there's the China problem. There's more generally, the debate around whether hyperscalers are going to ramp in-house chips. I would say, NVIDIA has a head start, clearly, because they have a very strong ecosystem. They have a very large installed base. People know how to use their GPUs. You have universities who are teaching their students with NVIDIA GPUs and who have been doing so for 10 years, like in computer science departments. And so that's very hard, to break that kind of ecosystem strength. And then with regards to China, so yes, as Jensen mentioned yesterday, there is a huge market there. And if NVIDIA doesn't address it, if the US platforms don't address it, well, China is, of course, ramping. We've heard about Huawei's Ascend chip, who is reportedly becoming competitive, excluding these ecosystem barriers, who is becoming, competitive on paper progressively. I mean, there's still a gap, but they're trying to catch up, and if you don't, maintain NVIDIA's leadership thanks to its ecosystem, and you allow, that new ecosystem to emerge, well, yes, that's a lost opportunity for the US. So that's, Jensen's message yesterday as well.
Let's turn to NVIDIA now. Shares are up, but not as much as they had been in the early going, although you see about a 4% gain. The company did post an earnings beat. It had 73% growth in its data center sales. Of course, those are the key GPUs that are powering the AI revolution. Investors also focusing on the export restrictions of the company's for the company's China-bound chips. Jensen Huang discussed the impact last night on Mad Money.
NVIDIA's market share in China was about 95% 4 years ago. It's about 50% today because of the limitations on the products that we sell. $50 billion a year market today. It's growing just like AI is growing everywhere. Over the course of this 4 years, the president's administration, we're probably talking about a few $100 billion worth of revenues.
Joining us now, T. Rowe Price portfolio manager Tony Huang. NVIDIA is one of his firm's top holdings in your fund, Tony. I know it is as well. So first, give me your reaction to the quarter and, again, what you think the overhang will be, so to speak, from a lack of potential sales into the Chinese market, despite the sentiments we just heard from Jensen Huang.
Yeah, well, I thought that, the quarter was definitely encouraging. One is that the ramp on the NVL72, the hardest product ramp, is improving. And then also demand is actually really strong and is actually probably accelerating. And so I think that's led by inferencing. You see multiple build-outs from different sovereigns. And so, I think that there are a lot of positive things. I think that Jensen is highlighting, a really valid point that to stay ahead in AI, you need to have that mind share of the world and everyone building on your platform ecosystem. It's not just about the chips, but also the software. And so there's a virtuous cycle in terms of R&D and scale that's required. And so To me, that's probably a really valid concern. And, the U.S. Has done well by, outcompeting, different countries in providing the best technology. And I think that is what matters going forward.
Yeah, I mean, certainly it shows there seems to be no slowdown in spending, despite concerns about DeepSeek using or needing less compute, for example, and other things. I am curious, though, how you go about trying to value NVIDIA and figure out whether you still want to own it at this level. Are you going out to 28 or 29? Are you still seeing the kind of growth, perhaps, that is reflected, at least in the current price, and being a fair price for that?
Yeah, well, I think there's multiple ways. I mean, we are long-term shareholders. I think about it, take a step back. We are probably still early in the S-curve here, despite, revenues growing to, significant amounts. I think you're seeing new S-curves that kind of pop up with, the Middle East building out, autonomous driving, the shift from, from generative AI, with agentic to also the physical world eventually. And I think if you look at the Mag 7, on free cash flow, NVIDIA is actually very reasonably valued. And so you look at the other Mag 7, they're spending a lot going through investment cycles. And so while you see the stock price go up a lot, the earnings multiple is actually pretty reasonable. EV to sales looks expensive because they are just so profitable. And so I think the bear case is that, they're just, the margins are so high. Like, how can this be sustainable? I think the bull case that this is an ecosystem platform company and not just a chip company.
So all the overhangs that we've seen on the stock, which sort of led it to march in place for a better part of the year, do you think they've overcome that? Whether it's the tariffs, the export controls, the DeepSeek and reduced spending appetite, the payoff, whether there's really an investment on all of this CapEx spending, whatever the bear cases have been over the last year.
Yeah, well, there's been a lot of bear cases, as you just highlighted. And so, I think that it's kind of like the market needs time to digest, and it needs to go through this kind of back and forth. And I think a lot of it could be in the rear view. Going forward, the guide doesn't include any China. But could that come back if there is, a trade deal, perhaps? And then I think that, with DeepSeek, you haven't seen an abatement in demand yet. And my view was always that, this is just like a normal part of tech cycles where costs come down and actually opens up the TAM because, the compute workload that would have taken you a year to do and millions of dollars, now you can do it in a month. So it makes it more valid and opens up new use cases. So to me, I think that, it's a long-term kind of curve that we're on probably with AI adoption, and we could still be early innings.
Yeah,
but the market will be still cyclical. I think that's the thing to remember is that, we're still in semis. If the world is cyclical, cycles are still cyclical. But if you take a long-term view, I think it's a little more clear.
But why would China want to buy a lesser chip when Jensen Huang is saying himself that Huawei, which is blacklisted by the United States, is quite formidable?
Look, and I think that right now is like they're going to come up with there's something like beyond an H200, less than a Blackwell, some sort of converted chip, because they need to stay ahead of Huawei in the China market. And that's why when you look at the reaction here, why tech's going to be up so much, despite even like the trade rule and everything we saw, it's because NVIDIA shows that this AI revolution right now is the ripple effect, but it all starts with NVIDIA.
Don't you think there's some tension brewing here?
100%.
The president doesn't want them selling into China. Jensen Huang's trying to create an argument that they should sell into China. The Wall Street Journal reporting this morning. I'll read this verbatim. Fresh accusations from U.S. lawmakers that the company is too close to China. They've received a letter from a Republican, Senator Jim Banks, a Democrat, Senator Elizabeth Warren, accusing them of being too close to the second largest economy on the planet. How do you actually think this is going to play out?
Look, I remember, it's easy, when you're in the beltway in front of a microphone, it's easy to say things, right? The reality of the markets are different. And I think it just comes down to U.S. tech. Part of why U.S. tech's leading China is that you need to have that market open up. And it speaks to the U.S.-China negotiations, why it's so important, not just for names like NVIDIA, but for Apple as well as the hyperscalers.
You say you need to have that market open up. Who's you?
U.S. tech needs that market.
Yes, US tech does. Washington, D.C. disagrees.
And
isn't that the ultimate point of tension? And I would argue who wins out? The person setting the rules, which is Washington, D.C.
And I would, and I think that point in tension has been there for years. But the reality is that by ultimately closing off that market, what you're essentially doing is you're cutting U.S. tech off at the knees, and on a silver platter, you're making China stronger. So it goes to the whole twilight zone, however you want to think about it, is that this is all giving China an upper hand. That's what Jensen's saying last night. Is like, we're leading. You continue to go down this path, Huawei will continue to narrow the gap.
To build on what John is talking about, there was a feeling that national security concerns would take precedence over profitability, over this idea that the tech giants really were necessarily leading the world. Do you think that that argument has fallen apart and that this administration essentially has put tech giants and their dominance at the forefront, even ahead of national security?
And I think it's I think it speaks in, I think that Middle East trip was a watershed event because it shows the AI revolution now coming to the Middle East. But what does that mean without NVIDIA, without Amazon, without the hyperscalers?
Also, AI revolution coming to the Middle East with a caveat. They need to make sure there are guardrails so that these AI data centers do not have U.S. technology leaking to China.
And to your point, you can't have both. You can't have your cake and eat it too, right? The point is like, how could you do it with the Middle East, but then China be like, okay, you can't have these chips, but we're going to sell next-gen Blackwell chips to Saudi, UAE, and I think that's part of the issue. Like, John, I think that's part of the issue here is that, like, how do you balance that and talk out of both sides of your mouth? And the reality is what Jensen's saying is stop tying our hands behind our back. Stop giving this market to Huawei. Let us go after that market.
This transition from Hopper to Blackwell and really contributing, Blackwell did nearly 70% of data center compute revenue in the quarter. Given that transition from Hopper nearly complete here, I want to play a clip on just what they had to say about Hopper on the call.
The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option.
Okay, and so they also said that they sold H20 with the approval of the previous administration. H20 been in the market for over a year, doesn't have a market outside of China. Is there a larger headwind that they should be considering or that investors still need to think through with regard to H20, given the geopolitical concerns that every company has had to acknowledge?
I don't think so, because, if revenues would have been 8 billion higher in the second quarter if they had H20. So now China is almost out of NVIDIA's numbers. So now, if anything, there's a potential tailwind, if NVIDIA is able to, again, work around the new export controls and introduce a new Blackwell SKU that can ship to China again, and there's been, this game over the last few years. It's not the first time, that a product is banned. You had like A800 and you had H20. And so now, anyway, Hopper is coming to an end. As you mentioned, 70% of data center compute, that's like 24 billion Blackwell says in the quarter. So Hopper and everything else is now less than 10 billion. In NVIDIA's numbers. So I would say now we're transitioning to Blackwell. Now China, we don't know exactly whether NVIDIA is going to be able to address that market again. There's been some news flow, in recent days around the fact that they're working on something. Jensen confirmed that yesterday. Yeah. He said he had nothing to announce. But yes, there's clearly an opportunity if NVIDIA is able to work around
Okay. So this looks like this is going to be the first time in a while that we've seen shares rally off the back of their earnings, even when they've beat in some prior quarters. Why don't you take us through first some of the things that you liked before some of the things that you found challenging with NVIDIA's latest results?
Sure. Well, I think the title, if I was back on the sell side writing about this, it would be like Porsche, except no substitute, or there is no substitute. Years and years ago, decades ago, that was Porsche's claim that no other car was as good as theirs. And I think NVIDIA has a real hold on the very high end and even the less than high end kind of products that product space. So the company is firing on all cylinders. Everybody wants their product. They're moving forward with good products, and it doesn't look like the biggest fear that an NVIDIA shareholder has is that somebody else comes up with a good enough chip that's cheaper. That doesn't look like it's happening. So those are all very strong indicators, and why it's up today.
And then with the, they obviously flagged in the earnings call, and we kind of knew that obviously ahead of time, the China chip export controls there and the impact there. Does that concern you at all, or do you feel like they're on the right track with addressing that hole?
I think everybody's on the right track with addressing the whole thing. If you notice, outside of tech news and even the market, the Trump administration has a target on China, and they are trying to get them to do things in any way that they can. The latest thing, again, I don't really want to drag the news in here, but they're going to start denying Chinese students who have some kind of tie to the political party there, the right to, or the ability to come in and attend our universities. So, they're throwing everything at it, and yes, NVIDIA is in the crosshairs there. On other channels last night, Jensen Huang was really making the case that, they're going to get them anyhow. Let's let them develop AI on an American hardware stack. So he's trying very hard, and we'll see how this ends.
Okay. I'm curious to know your thoughts on data center revenue. Obviously, that was the biggest piece of their pie. You had strong growth there, but there was growth in gaming as well, and I'll talk to you about that in a moment. Do you like the direction you see with regard to data center, and, does that to you still keep them clearly as to me, it seems like they're clearly the front runner here?
Absolutely. And again, back out in the news, about 2 weeks ago, there was a tour through the Mideast, and they are, the countries there are really interested in becoming AI development centers, and they make a good case for it. They have energy, they have land, and they have money. So the demand for the chips is only getting greater, and that's what we really see in the future for the demand, that there is no substitute. And if you're going to buy the best, you're going to buy NVIDIA.
How much does demand from the hyperscalers matter? Obviously they called out Microsoft with regard to off the back of their latest earnings, but we also know the hyperscalers have had talk about doing their own development of chips. How much does that matter to the future of NVIDIA?
It matters in the very long term, and I'm talking beyond 3 to 5 years. Of course it matters. And I think everyone would like to have a slice of this market, but it takes a very, very long time to develop these chips. It's a multi-step process. You can't just design it on a piece of paper and whip it over the wall to, a fabricator like Taiwan Semi to make. There is a lot of steps, painful steps, in being able to design and deliver and then scale the production. So they have a very far lead, and I think investors with a shorter time frame, 3 years or less, probably have a good runway for themselves.
Okay, I'm curious to know your thoughts on the performance in gaming. That was even better than expected. And, when you think about how the company started, that was essentially its origins. What are your views on that? Do you see that as potentially helping to soften the blow of that loss from China?
No, not at all. It's good that gaming was up. But if you scroll back through their revenues, they were a company that maybe 10 years ago, $6 billion was a big deal to them, right? Like for a total yearly revenue. And now we're up in way beyond that at this point. So it is not softening, but it is kind of good that the company still has that magic and hasn't left that behind. All of the AI stuff is leveraged off of what they were doing over in graphics. And I think that's important for the company to continue to pursue that. Although at this point, what's a few billion between friends?
Yeah, Yeah, no, you make a great point. And not even 10 years ago. If we go back to earlier in the pandemic, it was 5.7 billion. If we're talking about, earlier during that, and even at the beginning of the pandemic, it was, between, or right before the pandemic, between 3 and 2 billion, or a little more than that. Right. But in that range, not much more than 3 billion. So you make a great point. Any final thoughts you want to leave us with from your takeaways from NVIDIA's earnings, or anything that Jensen said on the earnings call?
No, I think directionally he's correct. I always caution people, because I used to work in AI as a developer. A lot of the people who are building things out, like the CEO of Anthropic is saying, like, we're going to have 20% unemployment. I think that's ridiculous. They're talking their own book, just like everybody on this channel does. We are going to tell you, what we believe about where we think things are going. But I think that there's a lot of development that has to be done before truly autonomous computers are out there. And it's a really high bar. That last 10% is hard. You can look at autonomous cars and understand the problem that they have, because it's essentially AI only with a small slice driving. We had development here in Pittsburgh of autonomous driving, and we don't have that many cars because we have unusual conditions like weather and hills. Like, you can make 4 right turns and not end up at the same place in Pittsburgh because of our hills. And cars, it's hard to train them how to drive. It just is.
Listen, Kim, I'm originally from Cleveland, so I know the Pittsburgh